Yeah, defensive areas, gold's worked well for us. I haven't owned gold in portfolios, and gosh, since I can remember, and this year we've had a albeit small, but a reasonably meaningful allocation to gold. That's been rewarding and comfortable, right?
And what made you do that?
Oh gosh, primarily the idea that a lot of it's behind the dollar, right? And the anticipation that eventually, right, we're going to see, or we are in a rate cutting cycle, and that's going to be it's going to be a headwind for the dollar.
My name is Michael Guyot. I'm here live at the NASDAQ, celebrating on behalf of Granite Shares, the new Yield Boost Fund family through their Tesla Yield Boost ETF, TSYY. This is the High Conviction Podcast. I'm here with my friend, Mr. Brian Krukiel. So, Brian, one of the things I like about you is that you are actually intellectual when it comes to this game of investing. I know you love markets. I'm curious because I think you're like me. We like to think about how markets behave. Has this been frustrating to you? Because let's face it, there have been a lot of reasons for why markets should go down.
Sure.
Markets just haven't.
It's been an extremely frustrating, I think, the past few years, right? Exciting at the same time.
Yep.
But yeah, to your point, pretty frustrating because a lot of things don't seem to make sense.
So what are some of the things that, as you think through the way markets have behaved, made sense the last 2 years?
Oh man, things that have made sense. I think playing the short end of the yield curve has been extremely rewarding.
Yeah.
I mean, it's the low hanging fruit that a lot of folks don't seem to be taking advantage of, right? So through various capacities, right? Structured income, structured credit. There's a lot of opportunities there, and for me and a lot of my clients, right? That's just been the low hanging fruit and a really good opportunity for a risk adjusted return.
Let's talk about the client base that you have. You're dealing with separately managed accounts. You're in a fairly well-to-do area of Texas, as I understand it. What is their primary objective? Are they looking for yield, looking for total return? They want safety?
Sure. I'd say the majority of my clients, have done well for themselves, and they're looking for growth, but also looking for preservation and safety, right? I'd say that the majority of our clients are, they're planning clients, right? So we're planning out for income for the rest of their lives. And, protecting their capital is as important as growing their capital is.
Let's talk about the income side of things, because there's a lot of ways of getting yield, a lot of ways of getting income.
Sure.
What are some of the areas you like to focus on?
Man, what's worked well for us, for the past few years has been, energy infrastructure, MLPs, things of that area, dividend stocks, quality dividend stocks, and then back to the structured credit. That's just been a, short dated fixed income more broadly, has been a real exciting place to be for us.
On the growth side, have you been participating in some of this AI strength?
We have, we haven't been heavily invested in it, but within the growth side, some of the areas that have worked, has been more infrastructure based, industrials, things of that nature.
Do you think that there's going to be more fuel to that fire on the infrastructure side? I mean, there's a lot of talk about that because you saw some of that in the first administration.
I think there has to be, right? I mean, our energy system here in the United States, it doesn't have the capacity to facilitate the demand requirements. A lot of these data centers, and
it's coming from a guy from Texas. Come on,
you're telling me, man. I mean, it's just not there. Yeah. So I think that energy infrastructure, is going to or should continue, to be a rewarding place to be.
Talk a little bit more about that safety side, and you and I both know that's a loaded word in our business. Nothing's ever really safe. Just like I always say, nothing's a store of value, right?
Sure.
So we can go into that for another episode. But what have been sort of the interesting defensive areas you've positioned some client accounts in?
Yeah, defensive areas, gold's worked well for us. I haven't owned gold in portfolios, and gosh, since I can remember, and this year we've had a albeit small, but a reasonably meaningful allocation to gold. That's been rewarding and comfortable, right?
And what made you do that?
Oh gosh, primarily the idea that a lot of it's behind the dollar, right? And the anticipation that eventually, right, we're going to see, or we are in a rate cutting cycle, and that's going to be it's going to be a headwind for the dollar, which I think creates an environment for gold to do well, in addition to just the uncertainty, of what's coming.
What are some of the things some of your clients are saying about, their portfolios for next year? Are they expecting that you're going to change things? Do they think that, listen, it's status quo, we're happy with the allocations? Like, what are some of the clients saying to you?
Yeah, I think that there is some expected change. However, I mean, we're anticipating what's coming, and as in, I believe any portfolio should be an evolving portfolio, and so but I do think that at the end of the day, what we're looking for next year is growth in a lot of areas that we currently own. We're still a little bit underweight equities, but this environment has created a kind of it's a good time to be underweight equities, because when you're hanging on to short duration fixed income, you're getting compensated reasonably, for avoiding some of the froth that exists today.
Yeah, I think that makes a lot of sense. This is, of course, the High Conviction podcast. So we always like to ask the question of, what's your highest conviction idea for next year?
Yeah, high conviction, I guess, is what I feel that what opportunities are going to come. And one of those areas, I believe, is we're likely going to see spreads widen out.
Yeah.
And when that happens, should that happen, which it makes sense to, I think it's reasonable to expect that to occur. I think that's going to create a lot of opportunities within the fixed income market. So that's an area that I'm excited about seeing unfold. I think AI and providing the energy and resources to AI. If AI is real, and it definitely appears to be, right, we're going to have to fuel that fire. And how are we going to do that, right? And here with the U.S., I think one of the what we bring to the table is the ability to provide clean energy. And I think that's something that is going to continue to drive returns in a lot of energy infrastructure space.
Yeah. And when you talk about spreads, you talk about credit spreads. I have been very wrong on my timing on that, but I agree with you. It's like we're due for some stress, and that's the thing. When these stress points happen, you don't know what causes them, except with hindsight.
Right. We'll find out.
We'll find out. Right. It's like I'll tell you after it happens what the cause is. Brian, for those who want to track more of your thoughts and learn more about the firm, where are they pointing
Sure. FoundationWealthPartners.com.
And the different services you provide are?
Financial planning, investment management, and just a personalized approach. I mean, we build relationships with our clients, and I think that's what a lot of folks really want. And so
in a world of just nothing but Zoom, right?
Yeah, you're telling me our clients are important to us. They're our family, and I think that's a big value that we bring to the table.
This is Michael Guyot here at the NASDAQ. This is the High Conviction podcast, celebrating the launch of the Tesla Yield Boost Fund and the fund family, Yield Boost by Granite Shares. We'll see you all on the next clip.